What's going on YouTube, TikTok, Instagram, wherever you see me at? The rule of 72, the secret 70 rule every young investor needs to reach financial freedom with, and how it works and understanding it. Now, I'm YB or Dong, and I spend an ungodly amount of time studying and researching about finances. And one of the things young people do not know is the rule of 72. Now, let's talk about how it works real quick. Now, I'm not a financial expert, and I will show you examples and put it on the screen so you can see it. So make sure you pay attention to the video and like and subscribe to the video. It really does help with the algorithm. Now, let's get into this video. How it works. So the formula, divide 72 by your expected annual return. And the answer is the exact number of years until your investment doubles. That is how it works. It's very simple. Now, on the screen, I'm going to give you an example of a 4% rule or 4% return. Savings and bonds. Divide 72 by 4, your money will double about 18 years. And let's look at the next one, real estate. It gets you about an average return, 8% return a year. So 72 divided by 8%, that gives you 9 years. And if you do the S&P, the return is 10%. So 72 divided by 10 give you 7.2%. Now, why does young investor need it? It provides you how long your money will multiply over time. And this will help you understand it. So let's go into every financial influencer online tells you same thing. If you want to escape the 9 to 5s, you need to buy rental properties. They paint a picture of you sitting on a beach while cash actually rolling into your bank account. But let's be honest. It doesn't really work like that. That is a lie. Real estate isn't a passive income. It is a second high stress job. It means dealing with late rent, structure, roof leaking, and a nightmare eviction court. Now, today I'm going to go show you how simply automating an S&P 500 strategy completely destroys the housing market, saving you your sanity while deducting your money on an autopilot. And I'm here sharing exact math, the formula every young investor needs to use to hit financial freedom ahead of schedule. Now, the real estate nightmare. Let's look at an actual real estate reality of being a landlord. First up, bad tenants. When you buy a rental property, your entire financial health relies on a stranger paying you on time. If they stop paying you, you can't just kick them out. Eviction can take months and cost thousands of dollars legal fee. Meanwhile, you still have to pay mortgage out of your own pocket. And that's assuming you didn't trash the place before they left. Now, the second problem is the volatility in liquid. Real estate advocate claiming housing is stable, but your wealth is completely locked up. If you need $50,000 cash for an emergency fund tomorrow, you can't just sell the kitchen. A house takes much, and real estate agent fees and closing cost you money. So let's talk about the S&P 500 advantage. Now, compare that with the S&P. When you buy a single share S&P index fund, you instantly buy a tiny piece of 500 largest, most profitable company in America. You're instantly diversified across tech, healthcare, energy, and retail. Think about the operational efficiency here. Tim Cook's at Apple is working for you. Elon Musk at Tesla is working for you. And guess what? None of them are going to call you at 3 a.m. because their toilet is overflowing. Well, I hope not. If you need your cash back, you can click sell on your phone and the cash is in your bank account in days. You can start with just $1, completely bypassing the massive amount of money you need for down payment required for a decent house. Now, let's talk about the secret math, the rule 72. But how fast does it actually get you financial freedom? Well, This is where every young investor needs to master Rule 72. It's simple. Mental math to trick to figure out exactly when your money doubles. So, like I said earlier, 72 divided by how much compound interest you're going to get. It's not that hard. So, but the S&P 500 has a historical long-term average of return of a 10% per year. So 72 divided by 10 is 7.2 years. So your $10,000 will double to 20,000 to 40,000 and 80,000 on autopilot every 7.2 years. Now, this is why I gotta tell you, looking at real estate can make you wealthy, but it demands your time, energy, and peace of mind. While the S&P 500 pairs with the Rule 72 gives you the time back, it's the ultimate strategy of being lazy, and it's highly effective at building wealth. You don't need a massive down payment. You just need a brokerage account and automated monthly contribution and time to let the compound to do the heavy lifting. Now, if you want a step-by-step guide on how to set up for your next automated index portfolio, watch the next video, drop a comment below, and if you're team stocks or team real estate, hit the subscribe button, and let's see you in the next video. If I get a lot of views, I'll make a video of how to buy index fund and what to look at for index fund. So hey, stay tuned for the next video.